Today on the episode, we're going to talk about CMHC raising the ceiling rate for first-time home buyers to 1.5 million, seeing if that helps first-time home buyers or who it might help. So I don't know who these first-time home buyers are. If you go to a city like Toronto and the average income is 57,000 and a mortgage on a $1.5 million house is over 8,000 a month, math doesn't really add up. So I don't think this really helps first-time home buyers. I think Ron does a good job of explaining why it might help the voting baby boomer generation being able to sell their houses, have people who can actually buy them, but they won't be the struggling, low-income person who's trying to get into their first house.
How could it be that if we go to a $1.5 million cap, now we're at 12 or 13 times average annual income in Canada? Why isn't government working on lower priced homes? How does supporting a $1.5 million starter home serve young people? The truth is, it doesn't. Who does it serve? What about the boomers? What about people like me, my age? Old people who have bought a home for like $200 and a quart of strawberries 30 years ago, 35 years ago, and now it's worth $2 million. If we find a way for the government to help support that $1.5 million price point, are we helping those boomers sell at higher prices? Is that the goal of the government?
So I think like a lot of government policy, this is designed to get votes from a certain demographic. When they came out with this policy, I think they said it was one of the biggest housing or mortgage changes in Canadian history, and they tried to tout it as it's this, huge thing to help young people be able to get into houses. But when you really look at it, that isn't what this is, right? It's designed to get votes from a certain segment of the population. It isn't really going to help new people get into a house. If anything, it's probably going to drive the price of houses up. I don't think this helps at all with actually solving affordability in this country. We need to build more homes, be able to do it more efficiently, get the government out of the way. This isn't the right solution. So it will be interesting to see how many houses that were listed for $1 million and less will actually be more than $1 million now, because the pool of people who are allowed to buy it with less of a down payment can get into that market. I think that happens a lot more than we see first-time homebuyers being able to get affordable houses. So the big problem with affordability in Canada, most people, it's not actually getting the down payment. Most people can have a way to get the down payment. It's having enough income to actually service the debt. So getting a higher amount of loan and putting less money down actually makes that situation a lot worse. It doesn't, the down payment isn't most people's issue. Most people can borrow it or they can figure out a way to get it. It's getting the bank to go along with your income for the amount of debt you have to service. This doesn't help that at all. Where it might help is maybe the few people who could afford the $1.5 million house now will get out of the way and won't be buying the $500,000 or $600,000 starter home. I think you do have to raise that ceiling at some point, because new homes in the bigger cities like Toronto and Vancouver, you're probably not going to be able to buy a brand new home for under that price pretty soon. So however people can get it done, they're going to have to. But basically, anytime the government puts in a policy that makes a house more accessible for more people, it is going to drive the price up, which in that case isn't really going to make it more affordable anyways. He talked about the earnings, how many times earnings you need for the house. And I think that's the real number people should look at to decide if the house is affordable or not. And they're definitely not in Canada right now. I think as housing continues to be so unaffordable and there really is no clear path to get out of it, you're seeing less and less people become homeowners. From 2011 to 2021, renters increased by 20-some%. That was about double the home ownership rate, which only increased by 8%. The group of people that are least likely to own their home are millennials. In 2011, there was 44% of them own their home. Now it's only 36%. So that's a big decline, and I think we'll continue to see that unless something changes. So obviously, as an apartment owner, maybe this is the perfect time to get into apartment investing. There's a lot more renters coming online. Again, I don't think a lot of people just coming into the market are affording $1.5 million houses. So they're probably going to have to rent for quite a long time. So there's definitely a lot more clients coming to rent places. We've seen it in our business, and I think you've seen it across Canada as vacancy rates keep falling. So as you see the country continue to bring in record numbers of immigration every year, most of those people can't afford to get into the housing market, so they're renters. There's not a lot of new rental supply coming online. That's why I'm really bullish about real estate. We're buying, even though interest rates are high, we're still buying multifamily. Us and our investors really like the future. I think the next couple of years for multifamily apartment investing looks really good just due to the sheer supply of people coming into the market.